Hey, it's Lewis here and welcome back to the channel. And in today's video we're going to be going through 3M stock and we're going to be using TIKR terminal to go through all the financials, and then from there I'll be putting the numbers into my analysis checklist to see if the company is good enough quality for us to be interested in. I'll be then using DCF valuation to determine the fair value of their stock. Let's get straight into it. Who are 3M? So the 3M company is an American multinational conglomerate corporation and it operates in the fields of industry, worker safety, US healthcare and consumer goods. The company itself produces over 60,000 products under several different brands. These includes such as adhesives, abrasives, laminates, passive fire protection, PPE. Yeah, the list goes on, you can read them yourself there. And yeah, the company itself is based in Minnesota. As well as this, the company is a member of the S&P 500 index. Now let's have a look at the sales for 3M and we'll start with the sales per business. So in 2021, 36% was made up of safety and industrial. 28% transportation and electronics, 26% healthcare, and 17% consumer. So yeah, quite evenly, well, I say evenly split. It's quite split across quite a few different sections really. But then yeah, sales per region. So 42% sales come from the United States. So it's mainly a US company really, but they do also have quite a bit of sales in Europe, Middle East and Africa, making up 19%, then also 19% in Asia Pacific, then the rest make up China, Hong Kong and the Americas. So now let's have a look at the 3M financials using TIKR terminal, and we'll start with the income statement as always. So yeah, from 2016 to 2021, revenue growth has been, slow but steady. Let's be honest, it's a bit of a stalwart is 3M. So from about 30 billion to about 35 billion. So you can see the year-on-year growth from here. It's not very high. It's like low to mid single digits, 3%, -2%. No growth in 2020 and then big 10% growth in 2021. So you'd have to assume going forward that you're talking low single digits, so probably to match inflation, likely, or at least you hope. But yeah, anyway, looking down and straight to the profit figure, and this business is profitable all the time. One thing I really do like about it, just consistent net income. Very simple, but it's just something you like to see. Something as well is, let's have a look at their shares outstanding. You won't need to go down over time. So yeah, from about, 619, latest 12 months, 583, solid. So they're buying back shares. So if you're doing this at a good price, it's a win-win. We'll come to balance sheet now. We'll have a quick look. So what do I like to see here? So I want to see long-term debt going down over time. As we can see from 2016 to 2021, it's actually been going up a bit. So yeah, you want to know why they're taking on debt. If the business is doing well, I'd want to know why they've taken on this, bit of debt here. What's that, about 5 billion? We have prepaid a little bit in the last 12 months, which is all right, but yeah, you want it to be going down, let's just say that. But you can look in the 10K and see, what reasons we have for taking on the debt. Another thing I like to look at is retained earnings over time, the accumulated profits of the business. And yeah, this is going up over the past 5 or 6 years as well, so solid stuff. What next? Cash flow statement. So yeah, what you want to be seeing is, so free cash flow is cash from operations minus capex. So what you really want is your cash from operations to be going up over time. So these two minus each other equals free cash flow. But yeah, just from first glance, it's looking like they're increasing this over time as well. Not by much, probably just in line with revenue growth, but they've got free cash flow nevertheless. What else do I like to see? I like to see buying back shares. You can see that they've been buying back shares. I like to see dividends going up over time. So yeah, increasing of dividends. I think we're a dividend king actually, which is basically means they've paid dividends consistently for 50 years or more, which is quite a big deal. It shows 3M has quite a lot of staying power. Finally, we'll have a look at the ratios. So we'll go to the return ratios, and this is one thing I really like about 3M. They have really high return on capital. I personally like to see above 15%, but we absolutely smash it across the board here. You're talking in the 20s at least. That's really, really solid. Margins wise, solid gross margins, consistent. And then you're looking at net income margins, very consistent as well. Don't really change too much. 2019 maybe a bit of an anomaly, but it's all within that about 14 to 17% range. Doesn't change much, but it's good to have consistency. And then free cash flow margin isn't too far away from net income, which is what you want to see as well over time, especially for a old business like 3M. Liquidity wise, current ratio, we're looking at above 1, solid, absolutely smashes it. What else we got to note? Dividend yield of 4%. For you people who like your dividends, interesting. What else? Cash conversion cycle, a new thing I've been looking at recently. I like to see this about below 60. It's a bit high, but I think some industries are a lot worse than this, so it's not the end of the world. Debt to capital, something I play quite a big emphasis on. It's above 50%, which is a bit annoying, but you can live with it if they do produce enough free cash flow. So that's the financials for 3M. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now let's take a look at the genuine impact stats for 3M, and we'll start with the quality metrics. So it's currently ranking quite high for quality, so profitability very high, 789 it ranks, which is pretty decent. Financial strength weak. This probably relates to the little bit of debt they've got on the balance sheet. Capital allocation very sound. If you're buying back shares and growing your dividend, it's going to be sound, isn't it? So happy days. Then on the value metrics, let's have a look. So it's showing medium, so come see, come sa. A bit weird across the board here. Cash flow cheap, balance sheet expensive, income statement medium. So it can't quite decide there, can it? But they do produce a lot of free cash flow, which is a win-win. Historical growth, we've had great growth for the past couple of years. We saw 2021 revenue was up 10%, which is mega for 3M. That's like a tech stock. So revenue medium, earnings per share medium, and the rest of them high. And it's just looking a bit in the middle overall for the genuine impact ranking system. So now let's have a look at my analysis checklist for 3M, and so this company is currently a $83 billion market cap, and so first pillar, return on capital, above 15%, 5-year average. It smashes it out of the park with 25%, really, really high returns on capital business, something I really, really like to see. One of my key metrics. If a company has a low return on capital, I do genuinely avoid them, generally most of the time. Then on to profitability, absolutely smashes it, way above what I like to see, 16% net margins, average 5 years, just solid and consistent, what we really like to see. Free cash flow margin is pretty similar to net profit margin as well, which you would expect over time. Current ratio above 1.7, which is really good, no complaints. Cash conversion cycle, I like to see this below 60 days, but you can give them benefit of the doubt. Some industries just can't have that, but anyway, total debt to capital above 50%. It does miss on this one just. I would want the debt to stay at a similar level, and hopefully we can do this and start paying some debt back, or maybe grow out of it, but you don't want them to increase the debt by much more. That's just my personal opinion. Proven ability to grow, so revenue growth, net income growth, retained earnings growth, and free cash flow growth has been all there, so winner. Great capital allocation, so what are they doing with their cash to reward shareholders? So long-term debt repayment, they've been issuing debt, is what it is, but you want this to be going down hopefully over time. Decreasing shares, they've been buying back shares, growing with a dividend, and the new metric for good acquisitions, they haven't been impairing any goodwill, so I have to say they haven't been making any bad acquisitions, so we'll give them a green tick there. Quality score of 80%, so only 3 metrics in the red, so not too bad really for 3M, very, very solid. Then buy at a fair price. The most important pillar of all, you need to buy at a good/fair valuation to get you good enough return. Current P ratio of 15 and free cash flow ratio, price to free cash flow ratio of 14, and the DCF valuation for 10% return is showing $149 per share. So yeah, it's getting close anyway. I think time of recording, the share price is hovering around this figure. It's been a bit above it, been a bit below it. So yeah, if you can buy this company, at this price, it's looking very, very interesting. Now let's have a look at my DCF valuation for 3M, and I've taken my analyst estimates from marketscreener.com over the next 3 years, and then I've used a 2.5% perpetual growth rate into the future. So yeah, for a 10% return, we're looking at a share price of $149 per share. Current share price is it's about 150. It's been hovering a little bit, moves up and down all the time, but hey ho. But yeah, it's currently looking about there for a 10% return, which is very, very interesting, especially under the current market conditions, where who knows what's going to happen with the market. You've got a good quality business like 3M. If you can get a 10% return or better, you're absolutely laughing. That's the reason why I've already gone ahead and started my position in 3M. Just a fantastic business overall in my view. So there we have it. That was my full stock analysis of 3M. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.